The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. You got half of the Money Masters here. Steve Rhodes. Tom is out of town today. I think he's going to be trying to call in. So if he does, as soon as he does, we'll connect Tom to the show. Right now, you've got the Dow down about 7 points right now. S&P's just turned green slightly. Composite down 7 points, and the Russell 2000 off a couple. Microsoft is down 16 ticks. Intel off 2, Google off $3, Cisco down 14 cents, Apple up 71 cents right now. Our call number is 877-927-6648. You know, folks, if you don't have Tom's book, The Art of Timing the Trade, get it. You know, having if you take a look at libraries are key. Reading is absolutely key. You know, and if you got an iPad, use it. Download some books, or just, I like the hard copy books myself, but you know, you want to be able to read. You always want to be able to acquire more information, more knowledge. Tom talks about quality volume, and you know, no better way to show quality volume to you than right here live. What I've got on my screen here, and folks, you can watch us on Tiger TV. You want to go to the homepage at tfnn.com. Click on the Tiger TV button. You can watch us live. I'll certainly be able to teach you something. And I know that we've got our man Carlos and his daughter listening, Senya. She called in on the last hour, and that is absolutely wonderful that Carlos is teaching his daughter how to trade. To me, that's a beautiful thing. You know, folks, I want you to be able to do the same thing. You know, do something for others. That is really the way to be able to live here. Now, you take a look at the quality volume on the way up. We're looking at a 10-minute chart here on my screen. We're going back to the lows that were put in at about 2:40 yesterday afternoon. And if you take a look at that, you had volume on a 10-minute chart down around 740,000 shares. As price was moving up, if you take a look at the black line along the bottom here, that is my volume. You can see volume was moving up. That is quality volume. That is what you want to see. That is normal supply and demand. Now you take a look at the Qs. That's what we're looking at. That's the NDX 100 at 940, traded as high as 62.71, started to back off. That was as it was backing off with volume decreasing. That is quality volume as well. So that's the type of volume. That's where supply and demand, it all makes sense. When you see things like this get out of whack, in other words, you see the volume line on a downward trend and price moving up, that means, folks, that price is not real. Just think about it. So here is a great way to be able to see what Tom talks about as far as quality volume. Go get his book, The Art of Timing the Trade. It's absolutely, you want to have that in your library, folks. So let's go take a tour around the markets here. Let's go see what's going on over in Asia and elsewhere. In Europe. Right now, you've got the DAX up 32 points, the FTSE up 75. So let's go look at their charts and see what their charts are telling us. Inside the DAX here, and yesterday we were fortunate enough to have our man Bud Rolfs was tooling around inside the Tiger's Den for a while. He posted a chart, I believe it might have been a chart on the euro. There could have been some other charts that are out there, but I was multitasking doing the shows out here. And what you're seeing here, you are seeing the uptrend channel lines, and Bud is the master of it. Bud is the one who taught me how to really be able to take a look at and draw these channel lines. And what you want to do, folks, is when you're drawing channel lines versus trend lines, two totally different things here. And when you take a look at the channel lines here inside the DAX, you would start off with the low on September the 12th. And when you're drawing channel lines, you're using the bodies. You want to have at least 3 co-located bodies. Doesn't, whether it's the top or the bottom, and that is where your channel lines would be. And so you don't want to force it. In this case here, when you take a look at the DAX, when I say co-located, you've got the one that starts out on September 12th. The next candle where you're taking a look at a co-located body happens to be September 26th. The low out there was 51.18. You then run into another one on November 28th as the DAX was moving down. You then run into several here during the last week or so. You take a look at a co-located line on May 18th. You also see it on May 21st. You see it again on the 23rd. That was yesterday. You see it again today on the 24th. That is the bottom of the channel line. The top of the channel line here, you can see it runs into the, in this case here, August 15th, August 16th. Is a co-located body. You take a look at October 28th. You can look at the body on the 21st. You can take a look at the bodies on the 29th, on the 2nd. So, again, the more co-located bodies that you can find, the more accurate your channel line is going to be. Now, a real break, folks, of any uptrend channel is going to be to which side? A real break is going to be which side? A break would be to the downside. You can't. If your market is moving up, it's not a break to move up in this case here. You can float outside the uptrend channel. That's, in fact, what happened as the Dow moved into the March 14th, did it for maybe about a 5-6 day trading session or so, and then it made its way down. And it's making an A to B equals CD down. It is going to bust this channel line at some point in time. When it busts the channel line, it'll bust through it, and then it'll come back up, and it will test that area. If it doesn't get inside the channel, that, folks, is when you do have a break to the downside. Not a false break, but a real break. At this stage here, the DAX is being contained inside that channel line. Why is that important to you? Well, it's important when you understand that what we're dealing with here is one world markets. It's the handoff on Sunday when you've got Australia and Asia opening up, and then over into Europe, and then over here into the United States, and it's just one continual handoff out there. Well, you've got the DAX here is going to close in an hour and 15 minutes. If this were going to break this channel, you would want to know about it. So if the DAX finishes miserably, you would absolutely want to know about it. If it holds within inside this channel here, that's telling you that the bounce that could be underway or is underway, should continue. Right now, you've also got the DAX trading inside this very important October 28th swing point. Keeps testing the low, hasn't been able to really bust through it other than on 2 trading sessions here over the last 5. So that is on the DAX. That is on channels. And that one was hosted by Bud Rolfs there, even though it was my voice. It was his system. If we go take a look at the FTSE out there, and we'll take a look at the FTSE. You can see the FTSE making an A to B equals CD down right now, trading out at 53.41. It's trading back inside the range, going back inside the swing point from December 20th. The FTSE has more work to the downside, folks. And, if we are fortunate enough to get a nice little counter trend bounce here, it's just giving you the opportunity to be able to go ahead and take a short position, or if you are long and you're long in your long-term funds, to be able to go to cash. Because that is my advice to you. If you cannot go short, there is nothing wrong than being in King Dollar here. So the FTSE is going to be heading back to 51.51. This is the daily chart that we're looking at, and it's on its way down really into the August 29th area. That is the swing point low inside the FTSE, and I know that there is volume down there on the 29th, just as there is on October 4th, and that is where the FTSE is eventually headed. If we go take a look around Asia, let's go see what went on in the Nikkei last night. Nikkei, important for us to watch because, we'd like to be able to, buy the yen and go long the yen US dollar, as well as take a look at some pretty good stocks that have been beaten down, like Sony Corp. And in the case of the Nikkei has closed below the 1 to 1.272 A to B equals CD down. We're taking a look at the daily chart out here. Now, the folks that attended my workshop last Friday on buying and selling the D-point, there were some signals here on that B to C leg that would have told you, would have broadcasted to you, couldn't have yelled it any louder that it was going to do more than a 1-to-1. A to B equals C to D. It was going to do one of those other 40%ers. You see, A to B breathing patterns, A to B equals C to D, folks, happens 60% of the time in the marketplace. The other 40%, it's going to do an expansion. In this case here, what the Nikkei wants to do, the Nikkei wants to head all the way down into the November 25th area. The low on that is going to be 81.35. You traded out at closed out at 85.63 last night. That is where the Nikkei is headed down to. That means that Sony would be headed lower. Let's just go take a look at Sony. I haven't looked at that for a while here. Sony right now trading out at 1381 near its session lows. I'm looking at a monthly chart on Sony. If I just take a look at expansions between swing points, there would basically be two that I would look at, but I would really look at the first one, the most important one, the largest one, the lows of February 28, 2009. This is a monthly, so February 2009, all the way up to the highs of March of 2010. And if I take a look at what the 1.272 expansion is, it says that Sony should trade down to about $8.99. Now, if I take a look at a monthly A to B equals CD pattern on Sony, and let's see what that projects for us. That says that a 1 to 2 A to B equals C to D is right at the 760. So 760, 880 is the target range. The 1 to 1.618 A to B equals CD is at 1319. You're trading at 1382. The low so far has been 1355. But I do believe Sony, as long as the Nikkei is going to trade lower, so is Sony. The work out there is not done in the Nikkei. If we go switch over to the currencies here, take a look at what's going on currency-wise. Now, bullish or bearish, you need to be paying attention to the euro-US dollar. This is the weekly chart. And the weekly chart shows the swing point here from August 27th, 2010. Now, that swing point week, folks, there is no more important, in my opinion, swing point out there than the August 24th, August 25th time frame. If you're looking at a weekly chart, it would be the week ended August 27th. Why? Because you had a very powerful set of P index dates out there that have held as support. Inside the euro, they've held as support inside other equities. If you're trading below August 24th, you own an equity and you've written it down and you're below August 24th, August 25th, folks, send me an email. Because you know there's no reason to ride things down. Learn to collect your receivables. Every great business owner collects their receivables. I've seen folks that have got great products, sell their products, and forget to collect their receivables. You know what happens to those folks? They go out of business. And you got to run this money business like any other business that's out there. You absolutely do. You've got to stay with it. You've got to have discipline, just like you do in your other businesses. This is no different. You have to realize that like every single business out there, you will not make money every day. There is no business, maybe other than Apple. There's a couple of them, okay? But the majority of businesses out there do not make money every day. I'll guarantee you, Apple has some days where it doesn't make money. Hard to believe. It's got to be. Most businesses do not make money every day, nor do they make money every week, nor do they make money every month. Why? Because there's cycles. There's cycles, you know, just like the weather pattern, just like the seasons, spring, fall, summer, winter. You know, there's always seasons. There's darkness, there's light, there's tides go in, tides go out. It works that way in business. Do not set yourself up for disappointment because life's biggest disappointments are unfulfilled expectations. Expect that you will have losses. Well, respect the week of August 27th, the swing point low there, 1.25861. The euro needs to get above that by the end of trading tomorrow, folks. 877-927-6648. We'll be right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shree's Ultimate Growth Stocks free for 2 weeks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back to the Money Master Show, folks. Thanks for joining us. You got the Dow off about 8 points right now. S&P's relatively flat, down just 0.68 pennies. You've got the composite off 9. Let's go up to Rye, New York, to Jack. Jack, thanks for calling. Thanks for holding.
Hey, how you doing?
Good. Where's Rye, New York?
It's about 35 miles northeast of New York City. It's a suburb.
Ah, cool. Okay. Now, how's the weather up there now? Good?
Yeah, it's kind of overcast, actually.
Oh.
The temperature's fine, but it's been kind of misty and overcast for a couple of days.
Yeah.
But
Are you
we'll break up pretty soon?
All right. Are you a Devils or a Ranger fan?
Actually, I'm a slight Ranger fan, but I'm not all hung up on it.
Oh, you're not. Did you watch the game last night?
No, I didn't, but I read about it this morning. It must have been a heck of a game with that comeback.
Oh, well, you know what was amazing is I didn't get a chance to turn the game on until first. I thought it was going to start at 7:30. It didn't start until about 8 o'clock, and I forgot about it. Turned it on maybe with about 4 or 5 minutes already having ticked off the clock, and was already 2-0. I was like, "What?
Yeah.
What did I miss here?" You know. And so, but it was a good game, and so I'm looking forward to Game 6. We'll see if they can get the win and get to go to Game 7 back in New York City.
It's nice to watch some sports with intensity at that level. That's what makes it exciting.
I tell you what is amazing, though, since they have changed the way that the rules, if you will, the way that they call penalties inside hockey, the game has totally changed. It is now absolutely a game of speed, and with regard to being able to pass a couple of lines. So they've changed some things to really speed things up, and it is amazing. Just amazing how fast. And television captures it somewhat. Being there live absolutely captures it. And just the intensity of them going up and down that rink. I mean, those guys are coming off the ice, and their insides are burning. And I think they're probably in the best shape of any athlete out there.
They are amazing. I'm with you.
They are. So you wanted to take a look at GDX. I know it didn't say on my screen that you called to talk about New York and hockey, but how can I pass?
All right.
How can I pass that up? So you wanted to take a look at the Market Vectors Gold Miners ETF. Is that right?
Yeah, well, it's been making some. It's in the vernacular. It's been having some signs of strength, I think, recently.
Well, you had some nice volume yesterday, and right now, I'd be flipping on that turbulence sign. The reason is because it's coming up against a 0.786 retracement off of its last swing point. So if anybody's watching this on Tiger TV, the swing points I'm looking at first are April 27th high at 47.11 when it made a low all the way down into the May 16th time frame. It got down to a low of 39.08. That happens to be the 52-week low, 39.08. The 66.96 is the 52-week high. It's also coming off of a retracement off from March the 9th, 2012. And we know March 6th is kind of an important area for us as well. So it's coming up against an area where it should settle here for just a bit. Are you in this? Looking to get in this? How can I bet you are in it? Okay. So
would you be inclined to just dump it here?
No, I would be inclined to move my stop up. I would always let the market take you out. I do expect that what we'll see is the market move higher here, at least for a couple of days. And so I would let the market take me out of this thing. It's also coming into the swing point. So here's one of the reasons why. So the swing point that 0.786 that we're taking off of is April 27th. That swing point only has 8.7 million shares. Now the low on that, which you haven't gotten up to, the low is 46.51. But yesterday, you had volume of 31 million shares. So that's 31 million shares going into 8.7. Even if I just go across the screen to take a look at what candle it's going into an area that had 19 million shares. So I would absolutely, move my stop up inside the GDX. Now, on a daily basis, if we take a look and just see what the average true range is on this stock here, so on the GDX, as I can punch it into my system here, I'll give that number to you. So the normal daily movement over the last 10 days in the Gold Vectors Miner Trust GDX, folks, has been, there's the magic number, has been $1.66. Ooh, I don't like that 666 number. But this is only $1.66. So you got $1.66. So I would have it at least $1.66 underneath probably today's low. So the low is 44.31. I'd probably tuck it $1.66 underneath that. And and I would just continue to move my stop up in some method that you might use.
All right.
Does that make sense?
Very helpful. That is absolutely. Thank you so much.
Oh, you bet. Thanks for calling, and you bet. Take care. Folks, got the Dow up 10. S&P's just turned slightly green. We'll be right back.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations options, including price targets and price stops. As recently as March 21st, Market Insight subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, your ultimate trading mastery system, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks, to the Money Master Show. I'm your co-host, Steve Rhodes. Tom is away for the day. And if we take a look at the markets right now, you got the Dow up 35, S&P's up 4. And I want to go back to take a look at the GDX for Jack. Maybe he's still listening in. But if nothing else, I want to be able to teach you, the way that I would go ahead and start ripping apart a trade that I'm in. Because what you want to do is, in this case here, we're the GDX, when we took a look at the daily chart, and I'll punch that up on the screen, then we'll come right back to the 30-minute chart here. So on the daily chart, just knowing that we're in an area here where you're going to run into resistance just because you've got these wonderful retracement numbers coming back from a Fibonacci standpoint. I talk about 382, 618, 786, and you want to be aware of those things. Now, the software here that I use, Ensign Windows, it's got a great tool on there named after the one and only Larry Pesavento called Pesavento Patterns, and it's just an automatic calculation of retracements and expansions between swing points. I couldn't live without it in my trading because I like to know easily when we're coming up against resistance or support areas. as you're trading. Now, knowing that you're coming up against that, and Jack asked a great question. Hey, looks like we're having, some decent volume in it as it is. And, should you take your profits? What should you do? Well, I like to let the market decide that for me. What I like to do is manage the money on the way up or the way down, and just simply let the market, because I like to have a discipline of taking a look at A to B equals CD patterns that are out there, and like to take a look at the volume issues. So what I do here is drop down into a lower time frame. One of the better time frames out there is a 30-minute time frame. So you've got 13 30-minute time frames in each day in the markets during regular hours. And so if we just simply drop down to a 30-minute time frame, you can drop down to a 10 as well. I'm just dropping down to the 30-minute time frame. Now, when we take a look at the GDX here, because A to B equals CD patterns are being made out there all the time. Number one, if you take a look at the A point that was put in, it was put in at 2 in the afternoon on May the 16th. So we're on the 30-minute chart. The low out there is going to be 39.08. The chart moves up, and there's a couple swing points that you could choose, but since I now have this vision in front of me, I'm going to choose the one that is the most logical. And that most logical one is, as I take a look at a 30-minute chart here, I'm looking for the major intersections. I'm looking for where there's major changes in trends, because you're always going to have side streets just as you drive, just as a chart does. So it just depends on when you come in and you take a look at the chart here. And I like to let the market do 75% of the work for me. That, folks, is a beautiful thing. Well, the B point on this, where you see a major trend here, it's not right here. It's not right here. If you're watching this on Tiger TV, it is certainly right here where you saw the pullback. And what I'm talking about is your B point, which was at 11 o'clock on the 22nd of May, as it made a high of 43.76. From there, it started moving back. You can also see that's a logical place for the GDX on a 30-minute chart to have pulled back. Why? Because if you go all the way over to the left, you're going to see 100% move of a move, where the market was at a major intersection and turned down. When you see those moves of a move, you know to expect to see a pullback. Does that mean you should exit a trade? No. You should have an expectation that the market is going to be pulling back. And so you want to understand where it is that you're at, where you are at in the trade. Well, in this case here, the GDX pulls back, makes a retracement. If we take a look at the retracement from the A point to the B point, what we'll see is it does about a 50% retracement. It's between the 382 and the 0.618. So it's got a, I think it was during the, we didn't do the rubber band, exercise during this show. Maybe we'll do that again here. So grab your rubber bands, folks, and we'll do it, because I'll teach you about retracements and the power in understanding energy and how they really work in the marketplace here. So I'm going to delete that off my screen. I know that it has done nothing more than a normal retracement. Well, now it sets up our C point. Why? Because it was another major intersection where we saw a change in trend. And that change in trend came in at 11 a.m. when the GDX was making a low of 41.30. So we've got our A to B equals C to D. Now, there's a ton of information that has been released to us on this AB equals CD pattern. Number one, if you had the art of the chart, you would know that you would be paying attention to the B point here. And the B point is, again, 11 a.m., May 22nd. The volume there on the 30-minute was 1.7 million shares. When the GDX came through that, it came through at 3 p.m. yesterday on the 30 minutes. So between 2:30 and 3, it did 3.3 million shares as it crossed the B point. What is that, folks? If you take a look at that candle, that is what you would call wide price spread. You've got a wide-ranging bar. That is wide price spread with accelerated volume, because it took out that B point with volume. So the GDX on a 30-minute chart has a ABC that is confirmed. Well, the 1-to-1 takes you to 45.97. I can tell you it is more likely, because I have studied these C to D legs like nothing else out there, it is more likely the GDX will get up to 47.26 in that area, 47 and change. Well, let's go back over to the daily chart. And we go to the daily chart now and see what do we have in that 47 and change area. Well, we've got that 786, the swing point that I was using, which was April 27th. The swing point low there is 46.51. The high is 47.11. Did I say 47 and change? Did I also say, so now you got an ABCD pattern. That's a 1 to 1.272 that confirms up there. You would be making a move of a move. When you make a move of a move, what's going to happen, folks? You're going to pull back, or you're going to move sideways. Doesn't mean that the market can't have a mind of its own and do what it wants, but that's why use some type of trailing stop. I suggest always, if you're going to stay in a trade, what you want to do is if you want to understand that average true range, because if that average true range is too large for you, and what I did was I gave Jack here the average true range. I used the 100% version of it. I just happened to use the low of the trading session today, knowing that we already had a range there. So I didn't even do any multiplication. I just knew that if he just used probably a stop at around 42.65 or so, he was in pretty good shape. And if the market moves down there, let it take him out. He's got some profits. You can always get back in. Let the market, teach you. Now, the trick here is going to be when it does make that 100% move, what type of retracement would you be taking a look at? And because at that stage, if it's going to be doing a retracement, it's likely going to do more than just that average true range. And you've got to make a determination on whether or not you're willing to take that kind of heat. And what you're also going to do is you're going to look for the market to, now you still want to use a trailing stop in there, absolutely, and you want to make sure that is at least more than the average true range when that occurs, should that occur inside this trade here. But what you'd also be using is you would be taking a look at volume on a daily basis as you're dealing with that swing point. You start coming to that swing point with volume, there's no reason for you to back out of that trade with the exception of what else is going on in the general market. And that's really the other issue that Jack has to deal with this trader. Anybody that is inside a trade that is long, you have to take a look at the general market conditions because the gold miners, all of the great stocks are going to get hit if this market continues its A to B equals CD down. And the volume pattern out there suggests that that is in fact the case. And so if you go just simply take a look at the NDX. Take a look at the Qs out there, which I happen to be long right now. But if you take a look at the Qs have been, coming down with increasing volume. You came down here on May the 4th with 107 million shares. You were down on the May 18th with 80 million shares. You went up with 61 million shares. You went up with 62 million shares. With 56 million shares yesterday. It doesn't have the juice behind it. So all that's happening out here is it's just, when you take a look at the Qs, and we'll take a look at the A to B equals CD pattern out there. The first A to B equals CD completed here as a 1 to 1.618, A to B equals C to D. You do that, you expect to see some type of turn. That's what we're seeing here right now. And that area where the Qs are headed to happens to be March 6th. All of the ETFs out there are headed to the March 6th area. And the first one up, we're going to have to see what kind of volume it has coming into it, just as all of these are. Well, folks, what sets up here now, with this being nothing more than a counter trend bounce at this time, this sets up, in fact, let me just do it this way. Let's take a look at the possible different levels of what we would be looking at as far as A, B, C, D downs. Because, as you know, folks, here's the deal. This market is going to retrace to the 0.382 area, or it's going to retrace to the 0.618. Either one of those. 0.618 is normal. Well, when we take a look at our retracement from the highs to the lows, 0.618 on the daily chart of the Qs ends up being right around the 65, 67 mark. So we can draw in advance our A to B equals C to D. Our A point here is the April 3rd high, 68.55. The B point is all the way down here at April 18th when it got down to 60.76. So I can take this tool and go up to 65, 67 or so. That would set a 1-to-1 A to B equals C to D on the way down into the 57.80 or the 55.68, which would be 1.272. Well, what do you have lurking down there? Well, the 1 to 1.272 is going to take you close to the December 20th swing point that is out there, folks, close to that area. So, so you got to play this and make sure that you also get the general market correct as well. So that is for Jack. That's for all of you. Hopefully I have this buds for you. So hopefully that was a good little lesson on how to go ahead and take a look at some of the trades that you are in and certainly be able to manage it from a cash standpoint. I have a request here in the den, folks, and if you have not tried the Tiger's Den, please do so. Go over to the homepage at TFNN.com. You want to do that because it is a peer group of excellent folks out there that are there to help you learn and help you with decisions. So MDT, which is Medtronics. Medtronics is they sell manufacture devices based on medical therapies. Their 52-week high, 41.05. Their 52-week low, 30.18. And let's see, what do they have here? Are you looking to go long or short? in the den out there, and then I can give you probably better information. This thing is trading sideways out here. It's got a short interest of only about 2% out there, and it is trading inside this high volume bar here. And if you take a look at the high volume bar, you're looking at December 2nd as the area. Now, once you're inside a high volume bar, whenever you look at a chart, folks, you always want to be able to take a look at where the volume is at, because it should act as support or resistance, depends on where it's trading. Okay, so they want to buy this again at lower price. Well, that's pretty easy. You're trading inside the bar of December 12th. And with the general market in a correction mode, what I would do is I would let the MDT come down to the 3407 area, and that would be the first place, just taking a look at the daily chart out there. And let's see what kind of A, B, C, D patterns are there set up inside here. We would take a look at the high of February 7th. On the daily chart, makes a high of 40.78. The B point that I would look at is on March the 6th. That makes a lot of sense. The low there is 37.34. Retraces back up into March 27th. You can see here it made the 1-to-1 A to B equals C to D. The price projection was 36.93. Where does it trade down to on April 24th? 36.97. 36.97, folks. A to B equals C to D. You want to understand your A, B equals C, D patterns. What's the next A, B, C, D pattern out there? Well, the next one is, let's see. I would say right here, I would start with this swing point of May 10th when it was trading up at 38.99. And I would set up as my B point here right now. There's one that's really underway, which is yesterday. So that's the one that will probably complete after a retracement here. But right now, the B point I would be using is May 18th at 36.84. And the market moved up into May 22nd as high as 38.10. So right now, the 1-to-1 A to B equals C to D takes you to $35 and change. But that A to B equals C to D, it looks like it might even be a 0.618 retracement. Let's take a look from A to the B. You got to love it. The 618 retracement measurement, 38.17. Where does it trade up to on its bounce? $38.10. That, folks, is a beautiful thing. So, Medtronics, MDT, I would take a look at this as it moves all the way down into the bottom of that high volume bar, going back to December the 2nd. That's on Medtronics. Let's go take a look and see what's popping and what is dropping out there in the marketplace. So MasterCard, one of the leaders in the IBD 50. Let's see. I guess I don't really have the current ranking. I have the ranking as of about 4 weeks ago. But MasterCard then was number 14 in the ranking. MA is the ticker symbol up there. So let's go see what MasterCard is doing here. MasterCard, I haven't looked at this stock in a little while here. This thing has been on a run. Now you can see it has made its A to B leg. That A to B leg that I'm talking about is, let's just see here. So the A on this is going to be the May 1st high out at 466.98. And let's see what kind of, right now it's making its B to a C. If we take a look at the retracement level from the A point down to the B point, the B point came in really yesterday. Yesterday the low was 394.20. The session before that was 394.56. So we're going to, not yesterday, wasn't yesterday, it was May 21st. The low there of 394.20. So what you can see here is that the retracement onside MasterCard right now today, trading above the 0.382. That says it wants to go to sweet 618. That price point would be 439.18. You're trading out right now at 425. Interesting here. You can take a look at volume here on the way up. Not showing increased volume on the way up, but if take a look at price on the way down. Take a look at volume increasing here on the way down as well. So MasterCard doing nothing more than a normal retracement to that 0.618 level, 439.18. 877-927-6648. Got the Dow up about 20 points right now. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Kate Stalter on the Small Cap Roundup, Tuesdays and Thursdays, 11 a.m. Eastern. Up next on TFNN.
Welcome back, folks. 877-927-6648, Dow up 13, S&P's up 1, the composite off 3, small caps just above, just slightly green. And let's go up to Chicago to Robert. Robert, thanks for calling. Thanks for holding.
Steve, thanks for taking my call.
My pleasure. How are you today?
I'm very good and enjoying the weather here in Chicago.
Oh, good, good. Hey, have you been to any baseball games up there?
I have not yet.
No? Oh, you gotta get to a baseball game and have a hot dog with some mustard on it.
At Wrigley's or at Comiskey Park?
Either park. Which park do you like? Which park do you like?
I like them both. I like to live in the city and enjoy both teams.
Yeah, that's down here in Florida. You got to go watch a baseball game inside a stadium. Well, I guess you go down to Miami though. You go down to Miami and watch the Marlins there in an outdoor stadium down there.
Yeah.
Now, baseball. Do you like baseball very much?
I love it, and I really truly enjoy both teams in Chicago, and that's really, most people are either Sox fans, White Sox fans, or the Chicago Cubs fans, and really I love them both.
Were you born and raised in Chicago?
Yeah, I was. I guess I'm truly a Sox fan because I know that because when the Cubs play the White Sox,
yes,
I root for the White Sox.
Oh, okay.
But I really enjoy both teams.
Oh, that's great. That's great. You wanted to take a look at CERN, CERN, and Cerner Corp, which manufactures healthcare information technology. Tell me what you're doing and how I can help you out here.
Yeah, I've been long this a while, since actually last October, since 7150.
Oh, man, good for you. Okay.
I'd like to stay long, and where do you see it going?
Well, I actually was looking at this stock a couple of days ago and was looking at this as a stock to buy on a pullback. And, and as soon as let's assume that there's going to continue. Now, it's also been holding up pretty well during the market correction. Now, it made its high, most recent high out here on May 1st, so that makes sense. The high out there was 84.10, but you're trading at 79.55 right now. So the pullback on this has not been anything significant, and the volume also hasn't been anything significant here. So this thing, I'm going to put this on because I remember looking at this on the weekly chart, on my other system, weekly and monthly chart. And so on the weekly chart, now the danger here on the weekly chart is if this thing were ever to fall out of bed, where you'd be headed back to in a heartbeat would be $46. So that's a danger with a stock like this. But if you just take a look at the ABCD pattern that is out here, and we'd start with the lows here just to get an idea where it is headed. That when you go to the low of November 21st, 2008, when it traded out at $15, that's when you should have been in it. How do you know, huh? But see, the retracement has been so little. Even since that low, the retracement has been 0.382. If I go up from the bottom to the top, so less than a 0.382 retracement. So this thing wants to trade higher. This thing wants to trade at least to 86.79, but likely even higher. There's other ABC patterns that are out here inside this stock. And what I liked about this is everybody here is basically in the money. These are the type of stocks that in my opinion, that when the correction is over, whenever that time period is, this is one of the types of stocks that you want to be in. So I congratulate you for being in this thing. What you want to take a look at is its area of real support is going to be the breakout day from February 8th. And the problem there is if it comes back there, you're going to feel a little bit of pain if you're in at the $71 area, because that area, the high is 71.80, but the low is 67.77. So you just have to be, careful there. Does that
wonderful.
help? And now,
wow, yes.
Yeah,
that's wonderful.
Yeah, and so and it's really got that $71 area, 71.80 should be some pretty strong support. So it starts breaking below that, then you're gonna call me back, all right?
Sounds good.
Okay. Thanks for calling, Robert. Have a great day. Folks, stay tuned. You got Kate Stalter doing the small cap roundup all the way out in Santa Fe. Then we go just to her neighbor to the north. We go to Mr. Larry Pesavento for the Futures Hour. Thanks for joining me. I'll be back at 9 o'clock in the morning. Have a great Thursday, folks. Look forward to seeing you tomorrow. Bye-bye now.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call